I'm Erin Houston, co-founder of Wearwell, an online membership service to shop for sustainable clothes. Meet Liz. She is a Wearwell member and one of the 34 million women today who wants to make a positive impact on the world when she chooses to make a purchase. Yet when Liz goes to buy new clothes, she knows that the fashion industry is the second largest polluting of our planet today. It's not just bad for the environment, it's also bad for the people who make our clothes. She's tried subscription box services, but they can't tell her much at all about the impact of what they've sent her. And she knows that their business model has an enormous carbon footprint. So Liz is left to search on her own, wading her way through a sea of confusing certifications and terminology, and gets lost trying to figure out what's greenwashing and what's not. Fed up with her search, Liz instead turns to Wearwell, where she takes a brief style quiz and she signs up for membership. As a part of her membership, Liz receives a monthly online selection of ethically and sustainably made clothing that is curated just for her. She can read clearly about the social and environmental impact of every single item, learning, for example, that this yellow dress was made in a zero waste factory that pays its female garment workers a living wage, because we've done all of the work for her of vetting our brand partners on specific wage and environmental impact criteria. So Liz and our other members buy from us every month because we have transformed their approach to shopping. We make money through our monthly membership fees, as well as the sale of clothing and accessories that we source from our brand partners. Our average order value today is $136, and we make on average a 55% margin for every product that we sell. Despite a global pandemic, Wearwell has been growing every single month. Today, we are serving over 1,000 paying monthly members, and we just closed out 80K in sales this past quarter. We're the only company that is curating clothing for the conscious consumer. Companies adjacent to our own either aren't able to source from emerging brands that really walk the talk in our space, or they don't actually solve Liz's problem of endlessly scrolling in the first place. We're testing out 6 different acquisition channels today, one of which are our marketing partnerships, like what we've built with Bar3. It's been fantastic for our brand awareness. It's resulted in an up to 10% conversion rate, and it's allowed us to acquire high-value customers just like Callie, who in the first 6 months of her membership spent over $1,000 with Wearwell, but it cost us $0 to acquire her. We do have a paid element to our acquisition. The blended CAC today is $29, and our lifetime value is growing every single month because of our strong retention rates. When we're serving 60,000 monthly members, we will be doing 10 million in revenue. And to get to 100 million, we'll be serving 170,000 monthly members, which is just 0.5% of our market. So we don't plan to stop there. We'll extend into home goods and clean beauty and partner with large retailers. Our team was just recognized through an award from Klarna, a leader in e-com tech. And together we have a combined 30 years of experience in e-commerce, online membership sales, and impact measurement expertise. I'm Erin Houston, co-founder of Wearwell, where we make it easy for women to dress like they give a damn. Look forward to your questions. Thank you.
All right. Well done, Erin. Okay, Winnie, welcome. Thanks for your patience. Last in the alphabet.
Hi, everyone. I'm Winnie. I'm an investor with M13. We're an early stage consumer tech fund based out of LA, investing out of our third fund. And honestly, we're just very excited about, companies powering a large portion of the consumer wallet share. So thinking about healthcare, fintech, e-com, like big areas, consumer spend. Within the space, Erin, we are early investors in Rothy's, which is like shoes from recycled water, carbon 38, bonobos. So definitely within our sweet spot. My question for you is, and our check sizes are between, so we lead our sweet spots like leading Series A with like 5 to 10 million, or doing a C check for about, 500K to 1.5 million, pretty flexible on that. My key question around you is like with subscription boxes, like almost a sustainable Stitch Fix. What is the churn like for your first existing 1,000 customers? What's kind of like been the renewal drop off rate, and kind of like walk me through a little bit of that.
All right. Thanks so much, Winnie. Other investors, I'll go back around the horn alphabetically, but if you have a burning question, always write. You can write QQ in the chat room like Samit just did. Samit, what's your question, please?
There we go. Hey, Erin. Great to connect again for this. It's actually a question and a statement. Just a quick statement. I know that you had H&M in your deck, and you had the cross stuff there. I would just slightly recommend changing that actually maybe to a Forever 21, only because H&M launched a sustainability focused investment firm, and they've been actually taking a lot of investments into great companies. A-Day, for those who may know them, is the technical fabric and everyday women's wear brand. They have a member on their board now, but they're looking to go deeper from this. Just a quick side note. I guess I'd love to really understand how you're sourcing and how you're discovering your your manufacturers and your artisans? That's the big burning question for me, and I'm very curious as to how you're also maintaining those relationships with those internally.
All right, thank you for that question. And Lorenzo, you have a question?
Yeah. So, hey, awesome. Just quick question around what your return rates are, if any, and then you sort of compared yourself to the sustainable Stitch Fix, but by saying that your persona, your customer persona, actually knows that that business model is highly unsustainable. How do you differentiate yours in that respect, with respect to the sustainability of sending stuff?
All right, thank you, Lorenzo. And back around to Andrea. Question for Erin.
Yes, hi. I was just writing it in the
I see that.
box. No worries. So we actually do also invest in retail. We were early investors in a company called Third Love, which is a women's lingerie company. At any rate, definitely like the presentation. And my question was around the upcycle competition. As someone that actually is addicted to buying clothes online, I spend a lot of time at ThreadUp, the Real, Tradesy. I didn't know if you consider those companies to also be part of your competitive set, because they also pride themselves on, if you look at their marketing, it always says like, buying these, recycled Valentino shoes just saved $30,000 in, recycled waste or whatever it is. So I didn't know if you considered them to be part of your competitive set. That's my question.
All right, terrific. And Anonymous from the Syndicate is asking why membership and not just free to use. So tackle those, Erin, 2 minutes.
All right. That's a lot of questions. Thank you, everyone. Lorenzo, I'll start with yours and just go in order. Return rates, you asked about. Our return rates hover right around 18% every month. 22% is standard e-commerce. So we're not seeing an uptick there. In fact, we're seeing that we do a pretty good job of getting the right product in front of the right person. In terms of the differentiation of sustainability. Actually, I'm going out of order. Apologies, Winnie. I'll come back to yours. In terms of differentiation with sustainability, with a Stitch Fix, for example, our business model has a 75% lower carbon footprint. Also, because we're not sending the product out right away for the customer to try on at home, it means that we can actually not have to deal with putting that product in landfill or finding some other place for that product to go if it comes back damaged. Sumit, thank you so much for that question, particularly around sourcing. I do want to touch on what you mentioned about H&M. Great that they're investing in sustainability, but they have a lot of work to do on cleaning up their own supply chain. And so what we really look at when it comes to the sourcing aspect is that we work with brands who make an impact in the actual making of every product that they create. We have about 40 partnerships today and about 200 more in our pipeline, and put them through a criteria for specifically fair and living wage and some sort of environmental impact mitigation. Happy to share more on our methodology there. Winnie, thanks for that question around churn and trends and renewals. Long story short here, our churn is very low. Our month-to-month retention has been between 91 and 96% every single month, except for the month of March 2020, which we all know what happened then. So it's been great to see it stay steady since then. Andrea, you asked a question about upcycling and competition. Definitely a part of our ecosystem. We're playing alongside of them. We just launched 2 months ago our Wearwell Again program, which is our resale program to sell gently used products we want sold back to our customer base. And the question around why membership, we find that if we can get someone to give us $8.50 per month, they're much more likely to open the email we send them. Thank you.
All right. Sorry, Erin. Thank you so much.